Welcome back, everybody. It's about that time of day again, 7:30 a.m. Eastern Time, Monday through Friday. I've got my partner in crime with me. His name is Marty Errico. My name is Joseph James, and we're providing you with your crude oil morning prep. We're going from the screen here in Los Angeles all the way to the trading floor in New York City. Now, once again, with me, I've got my partner in crime, my better-looking half, Mr. Marty Errico. Check him out over at tradersaudio.com for his live broadcast directly from the NYMEX exchange, where we trade crude oil, natural gas, gold futures, right, many other popular contracts. And, of course, come out and see me Monday through Friday, SchoolOfTrade.com. I offer a live trade room Monday through Friday at 8 a.m. Eastern Time. Among many of the things we offer, there's a free trial right on the website. Check out SchoolOfTrade.com for the free trial. Here's the plan today. I'm going to first begin today with you guys. I'm a technical analyst. I'm going to give you a top-down approach. Top-down approach means I'm starting with the big picture, moving all the way to the tiny picture, right? We're starting with the last few months, the last few weeks, the last few days. We'll check out and see what's happened over the last few hours. We'll analyze what happened overnight. We'll analyze what's happened coming out of London. I'm looking at trading the U.S. morning session at 8 a.m. Eastern Time. So for me, looking at what happened in the London trading session, right, 3 a.m. till 8 a.m., right, that's going to be important for me. So we're going to start with a much slower time frame, move our way all the way down to what happened on a much faster time frame. And by doing that, my job is pretty simple. I'm going to anticipate direction at the open. If I can find direction at the open, I can find high percentage trading opportunities at the open as well. We usually get a few opportunities right off the opening bell here starting at 8 a.m. Eastern Time. Now, of course, I'll be looking at charts this morning, and I'll be starting at 8 o'clock, whereas the trading floor will open up at 9 o'clock. So once I'm done with you, once we've put together our directional bias and what we're going to be looking for our levels today, I'm going to toss it all the way across the country to the NYMEX exchange. I've got my good friend, partner in crime, Marty Errico with me from Traders Audio. He's got his feet on the ground on the NYMEX exchange. I'll tell you, Marty provides us a very valuable aspect that we don't get from our screens. Not many people have their feet on the ground on the NYMEX who can actually put their finger on the pulse of this stuff. I'm going to listen in to what he's seeing and hearing and feeling on the floor today. I'm also going to log into his broadcast this morning and listen to what he's seeing in real time. Right? They do a great job at kind of interpreting or translating what they're seeing on the floor for us lay people out here, right, trading with screens. Look for him to look at market direction, intermarket divergence, market internals, option prices, and, of course, those pit session trading levels. Very important that you pay close attention to those pit session trading levels. The pit session levels are different than the electronic trading levels that I'm going to go over. So make sure you pay close attention to that. He'll be bringing up that towards the end. And then keep an eye on the intermarket divergence. He'll be talking about the difference between crude oil, RBOB gasoline, heating oil, and Brent crude, and how those are going to work in and how they give us clues, right, for market direction. So a lot of valuable information going to be jam-packed into this call today, guys. Let's get started. First things first, we begin every morning with a detailed morning prep in our live trade room. This begins with analysis of what the news is looking like today. So we're going to first begin asking ourselves, what day of the week, what week of the month, what month of the year, what's happening today? What should we be aware of today? Well, first of all, we head over to our trading blog over at sidewaysmarkets.com, and we can look at some of the focus points this morning. We had some mixed economic news coming out of Europe. Overall, the quiet morning session coming out of London. Most of the markets are still cautiously trading after that news last week from the Fed. It seems everybody is in a little bit of disbelief that it might have been that easy just to move through that potential Fed tapering. If you recall, last week we heard from the Fed. They postponed the Fed tapering. The markets went wild, right? Demand for gold drops. Obviously, demand for crude drops. We now know what the plan of the Fed is, but it seems that traders don't exactly trust it. It seems that traders are still waiting for a little bit more information, and we're probably going to hear some very soon. We've got some important news today, so we'll look at the economic news calendar here to begin. And again, we begin by asking ourselves that important question, what day of the week, what week of the month, what month of the year? Well, here we are. Today is a Tuesday. This is the fourth week of the month, right? There are 4 Fridays, 1, 2, 3, 4 Fridays, so fourth week, last week of the month. And, of course, we have the month of September. So what do we know about this information? Well, first of all, the month of September has always been a great month for me. It's usually one of the first months of the year that we start getting that dramatic improvement in volume coming out of the summertime month of August, September, October, November, December. These are the best times of the year to be a trader. So we know the month of September doesn't give me any reason to grab the golf clubs. It tells me to get ready for some trading opportunities. The fourth week of the month, the last week of the month, always a very, very busy week. As you can imagine, traders are trying to hit their numbers for the month. They're trying to execute trades that will hit their numbers. We've got the Hail Mary trades that come in. The end of the month, also combined into the beginning of the month, we begin to see hedgers. We begin to see speculators, people who are hedging for companies, right? Consumers of crude oil, delivery companies, airline companies, right? Gas stations, you name it. All of these companies demand on crude oil. And of course, with being consumers of crude oil, they're going to be entering the market this week trying to hedge their bets, right, for rising prices in the future. And we know today's a Tuesday. Tuesdays are oftentimes, they're middle of the road. You know, they're not Monday or Friday. They're not the beginning or the end of the week. Wednesdays, we have inventory days. Thursdays, we have jobless claims, right? So, yeah, we're not really seeing any fireworks going off for a Tuesday. The only thing we know about a Tuesday is that at 4:30 p.m. on Tuesday afternoons, and it's very difficult to find this information on any normal news website, right? It's just the one I have here. You're going to have to really dig into a service like TradeTheNews.com, which I'll use in our trade room, to get that 4:30 p.m. API news number. I get that API news number either from Marty or Jeffrey over at Traders Audio, right, because they get it on the floor, or I get it from TradeTheNews.com. But that's pretty much it. 4:30 p.m. this afternoon, we get the API, the American Petroleum Institute, we get their API number. So we'll be talking about that tomorrow morning in our prep. Most important thing today is we've got a few news events to worry about, 9 o'clock, 10 o'clock. We got a few Fed speakers, 8:30 and 12:30, right? We got Sandra Pianalto, and we got Esther George. Those are two very important speaking events this morning, one this afternoon, obviously over lunch. Now, boy, if you were watching yesterday, boy, those Fed speakers, they tore into the Fed and the White House. Boy, they really spoke their mind yesterday morning and yesterday afternoon. It was entertaining listening to Richard Fisher speak yesterday afternoon, just completely criticizing the Fed's decision to taper. And, of course, the markets are responding to this information. So we're going to be keeping a close eye on the reaction to the market, right, reaction to these speaking events. But most importantly, though, we know the meat and potatoes here will come from the 9 o'clock and 10 o'clock news. I've got Case-Shiller home prices, and I've got consumer confidence. Both of these news numbers are going to be pretty important for their own different reasons this morning. Home prices have been on a tear the past few months. We know those are likely to continue, and we're expected to see that this morning. Consumer confidence will be a very big, it's always an important indicator, always an important finger on the pulse of the economy. You can bet that traders will be watching these 9 o'clock and 10 o'clock news reports this morning, so that's when we're going to be focusing our energy. Look for the best trading opportunities this morning between 9 o'clock and noon, right? We get that 9 o'clock Case-Shiller home price index, and that, of course, is right after the opening bell on crude oil futures on the NYMEX pit. All right, back to the action here. We got some charts to look at. You can see I've listed all the charts here for us. Let's take a look at them in real time. Moving forward first, we have our anchor charts. Anchor charts, we begin every morning looking at where's my direction and where's my major support and major resistance. Now, what do you think? On this chart here, you don't have to be a rocket scientist to figure this one out. What's my market direction? We have a bearish direction. That bearish direction can be found by a few different ways. We have lower lows. We have lower highs. That's one way to do it. We can see we draw a price channel, right, or a trend channel. That's another way to do it. We make it even easier for our students by making sure that we color code, right, the chart. As you can see, the color is red on my screen. That means I am bearish. In the long run, I am bearish right now. Have you ever heard that expression, the trend is your friend, right? Trade with the trend. That's exactly what we plan to do today. Now, we're going to teach our students different trend continuation and trend reversal. So we'll teach both reversal and continuation patterns. But with a very clearly defined trend like this, we always know the easy money, and that's what we're here for, right? We're not here to work that hard. We like the easy money. The easy money will always come trading with that trend. Now, on these anchor charts, we like to find the trend, but we also like to find some major support and major resistance. Now you can see here we found some symmetry here at 102.30. If the trend is down and we are looking to get short, it would be very nice to know where we expect to see some profit targets, right? It would be very nice to know where we should expect to see a reversal. So we're looking at price collapsing here down to 102.30. Now, what we may see is we may see price just go right to 102.30, but we may also see price retrace and then go. So we need some more information. We're not going to use the anchor chart just to jump into the first trade we see. I want to drill down a little bit faster now. Let's go down from the 5,400 now to the 1,800. What are we seeing here? Well, a couple things here. First of all, we get a nice low wave count. You'll notice the wave count reset. And so now we have our 1, 2, 3, 4. So we're in the market now for a 5-wave push lower on this 1,800 tick. This is going to be a medium anchor chart for us. Also, we've got sell zones at 104.06 and 104.67. So basically this tells me with that low wave count, I can take this next wave, right, with new lower lows, or if we decide to go higher, I can also look now for the short happening at 104.06, 104.67. So really what we're doing is we're building in a few different scenarios right now. With new lower lows, yeah, we're good to go. Looking to sell short, all we got to do is find the entry pattern. But if we don't get lower lows, this is where it's going to be important for all of us to exercise patience and discipline. We know the long-term trend is down. Until that changes, which can happen today, I'm not going to sit here and say the trend cannot change because this is crude oil we're talking about. This ain't the S&P. We may be able to easily get ourselves above this resistance, change this now to bullish, and then we're off to the races buying pullbacks here using the wave pattern to get long. So it's important, keep up with me today in the live trade room. In our trade room, we'll be talking about this, we'll be watching this in real time. But as we see right now, and again, this will change later on today, most likely, unless, of course, we keep going lower here. A new lower low, looking to sell short. If we don't get short right away, we're looking for shorts at 104.06, 104.67. And if those fail, then we know, okay, now it's time to commit to the upside here. Will there be opportunities to buy up to 104.06? Absolutely. Let's drill down a little bit faster now. Go down to my 600 chart. As we move forward here, we're thinking there might be some ways to buy here. There might be some ways to buy. This would be counter trend on the way up, right, to that 104 area. As you can see here, not so fast. This chart shows me that I would be a little bit foolish to be a buyer right now. I really want to wait patiently. Now, given there are much faster time frames we can use to be buyers in between these levels. But again, guys, why are we trying to overcomplicate this? Let's trade with that trend today. Let's wait for these sell zones at 103.32, 103.48, or 103.75. Wait for these to react. All we have to do now is wait for price to begin to move lower. There's your first opportunity. Move lower, second opportunity. We test the 103.75. Brilliant. I look forward to that selling opportunity for what we call our double top pattern. So as you can see, I've got 3 different areas here where, yeah, I could probably try to finesse an entry in between these to buy. But in all reality, why am I trying to force it? Why am I trying to make this more difficult on myself? I'm going to sit back, relax, wait for in this case, it would be responsive sellers to enter the market. New lower lows. Lower lows are initiating activity. Initiating sellers, right, are initiating new lower lows. Now with initiating new lows, we're going to see responsive sellers come in, right, in market profile terms and push this price back lower, right, push this price back lower. So guys, stay patient this morning. As you know, we don't have any news until 9 o'clock today. We may have to wait for that best opportunity today. One more chart here for you guys, one more chart here. And this chart, in my opinion, really sums up what's going on. Where are we going to open this day? Is the day going to open up above or below the previous low of day? This is the most important I see. We've talked about the long-term trend. It's easy to see the trend is down, right? Very, very easy to see trend is down here. So with that downward trend, we focus on the previous low of day, 103.12, and I can see right away we've flirted with this area all morning. Are we going to get below it and go, or are we going to fail and go higher? Now remember, we talked about this earlier. It's the easy money is going to be to the downside. As soon as we start to see these sellers are failing, we're going to look for a very important opportunity above the London high 103.66 to start buying pullbacks. These will be counter trend. These will be lower percentage. But naturally, though, if these sellers fail, we are going to see a test of that 105.12. Match up that 105.12 with your 103.75. And as you can see, we do have to wait. The earliest opportunity we're going to get is going to be above 103.59. So keep an eye on that 103.60. If you want to be a buyer today, that's where we're going to be looking for it, right? Above that 103.60. We're going to look for that test of that previous high of day, as those sellers will have failed. So, right? So last scenario here, if those sellers don't do what they need to do, right? And that happens all the time, guys. Be ready for everything. Be prepared for the best, but be ready for the worst. And we know if these sellers fail, 105.12 is going to be an easy target. I've got 106.11, another target up top. All right. So I'm looking at selling opportunities. But in case those sellers don't come out to play ball, I'm ready for the buys. What was it? What was it again? 103.59, 103.59, and that target of 105.12. All righty. Now you know what I'm looking at on my end. But you know, I'm only just one man's opinion here. I've only got some charts in front of me. I'm always excited to hear and see what Marty's thinking on the trading floor. Marty, great to have you back today, buddy. What are you seeing? Is it quiet out there right now? What do you think's going on today? What do you got?
Well, morning, JJ. I think that we could potentially see, 102 as we were really looking at that level last couple of days as really kind of where all the longs were reinitiated back into the market over the last couple of weeks when we were kind of watching this uptick. Remember, the 102 level is where all these longs got in, 102 half, 102 even, and that's before, the chemical attack. That's before really post all this news that came out, right? So now that the dust is settling, now all this news is not even, really affecting the market no more. Remember, there's no basic supply-demand problems. There's no geopolitical risk. The war premiums out of the market, so to speak. So traders now are going to be looking to basically sell this thing, short. They're not in love with this market anymore as they were 2 weeks ago. So I'm kind of on the same page as Joe here. I am looking for some shorts, but if we do happen to rise above these, 103.70s, I believe. What would you say, Joe? It was like 59, 70s, around this level, 59 to 70, I'll call it.
Yeah,
you rise above
60.
there. 60, okay, I'll agree with that, 60. I'm looking then to possibly just see a little bit of a, retrace from yesterday. Just retrace 50% from yesterday, right? There was some pretty big paper buyers around that 103.60 level, 104 even level yesterday. Really big buyers that kind of came to the market, but that's the only concerning factor for me this morning, just looking at the market-wise. Paper comes in, they buy 60s, 70s, 80s, and they try even 390s, and they get them. So paper not long at that level, so I think we could see a little bit of a, retrace, I believe, but I'm still looking for lower prices, at least down to 102 half, 102 even, and I believe that's where we're really going to start to see a trend direction, okay? If we fall below 102, that's dramatic because this is where all the longs were in. Remember, we're hearing this net long positions in hedge funds and the COT report. Yeah, I know the stuff's a week and a half old, the COT reports, but it's just significant to know that hedge funds, speculative traders, and all the larger guys are net long, right, from 102 half up. So if we happen to fall and we get volume below 102 half and 102 even, that definitely indicates a trend direction, and I'm then going to really look to sell. But for right now, we're just kind of looking at, 104 half, 106.11, right, resistance up above, support down below. We obviously have this 103 even, and then we're going to break down to 102 half and 102 even. So again, we are looking for, if we happen to break or open up above the 360s, right, 103.60, 103.70, we're just going to look for a minor retrace, but still look to sell overall. I mean, it doesn't matter if we do break above that and catch a little bit of a bid. It's better to get a higher price to offer it out. Okay, so let's quickly just look over at our other markets here. We're looking at your RBOB and your heating oil, and this morning they look like spitting images of each other. The crude, RBOB, and heating oil, they're all sitting at low prints right now, and they're all coming off lows, and they're all kind of just chopping around. So RBOB's around 261.23, heating oil's around 294.21. Yeah, they're both lower on the day, but they're looking like they're getting ready to break out of either way of the range. So it's like we break out below 103, then we start to sell retracements, break out above the, the 360s. I guess those paper traders will take a little bit of a long, and then we'll get that little bit of a retrace and then sell it again. So another thing here that we've been looking at here is the Brent WTI spread, Brent crude. Now this has been interesting here. The Brent WTI spread has been actually widening out, right? We're in backwardation by almost 20 this morning at 480 on the spread. So this is an indication for me that we have a little bit of a bearish situation coming into the market, right? Calendar spreads also are looking rather lower, right? That's also bearish. So we're looking at a couple of some bearish factors kind of coming into the market, especially with that RBOB heating oil and also now the Brent WTI spread. And take a look at the Brent crude. Look at the Brent crude anyway, 108. So we are looking at very bearish factors in this market right now as we have been falling. Now we kind of went sideways. We need to break out of this range one way or another. Continuing on, volatility has been really kind of getting sold off the last couple of weeks. We talked about that yesterday. Volatility, you just go into volatility and you make some money. So volatility has been on the offer for the last couple of weeks. We've been really kind of watching that more the less come into play. Remember, we do have a lot of coming out today as well, so I'm going to be focused on that news. All right, let's talk about natural gas. Then we'll get to those levels here because I got to wrap this up. So, all right, natural gas, right? Look at this. So natty gas, perfect situation here. We now, yesterday, just formed support at 359 and 358.20. This is perfect because we're going to buy that support below this channel, and that's the highest percentage trade to the upside. So we're looking for longs in natural gas after really selling off. Weather was a big variable in this market, weather cooling off just a bit. And then there were some supply-demand figures out of the EIA yesterday that kind of moved prices around as well. That report out of the EIA will be posted on the blog. I'm sure I'll get it to JJ so he can post it out. But basic weather, supply-demand issues made natural gas fall, but I'm thinking we can buy that support and try to get back within that wedge or that channel. Let's get up here, guys, some levels too for you here. All right, let's get those levels. Levels right now, ladies and gentlemen. Again, we're going to be looking at your pit session levels from yesterday's trade. And another thing, natural gas, I'm still in October. I know November has more volume, but I'm waiting until tomorrow to roll over to November because there's an options expiration tomorrow. So we should see increased volatility in natural gas, but I'm not nudging until we get until options expiration tomorrow. That's when we'll be in November front month. So that's how we kind of do it with natural gas. We hold off till the last minute. But crude, RBOB heating oil, totally different story. All right, let's go to our levels here. For crude oil. Crude levels here, 104.48. Your high from yesterday's pit session. The low from yesterday's pit session was 103.12. And we can use this as some support, right? Once we get below 103.12, then we can start to sell, I believe. Look at your daily pivot, 103.72. That's the turning point of the day, where if we pop above that, we'll start to take long trades. I got some resistance up above at 104.32, 105.08, and 106.44. Support down below at 102.96, 102.36, and 101 even. Remember how important that 102 even is as well, right? Volatility has been actually just holding steady for the most part. No big dramatic changes of volatility over the last couple days, so that kind of puts a damper on the party, but we could have potential to move with volatility kind of coming in just a bit. So, right, we came in from 30% over the last couple weeks, right? So on the roll, we fell on volatility. And that's what a lot of the locals in the paper and the pit are doing. They're selling volatility, right? And they're coming in and they're trying to buy the market up. And then when they see weakness, then they kind of sell it off like they just did last week. They bought it up and then they sold it off. So simple. And that's basically what these guys, how the approach to take. We're giving it to you each morning. All right, so let's take a look over into the natural gas levels real quickly here for the pit session yesterday. 367 even was the high. The low was at 359.70. Closing settlement number was 3 Remember the daily pivot here, 362.20. Turning point of the day where we'll probably look to start to get long again. It's kind of the same scenario. We're down at low print, so we're going to try to come in and buy that daily pivot, buy above it. Resistance up above 364.70, 369.5, and 376.80. Support down below, I got 357.40, 354.90, and 47.60. Volatility should increase today and into tomorrow and Thursday, as we have, remember, a lot of implied volatility coming into the market because we're expiring on the October natural gas, right? So we're going to see a lot of volatility in the coming days for natural gas. And that's really about it, guys. Again, those were your levels here. We are looking for that long in the crude, right, just to get a little retrace, but then that gives us a better opportunity to get this market bid up, and then we can offer it out real nicely, right? That's our plan. That's what we're looking at as we kind of continue on throughout the morning. So, alrighty, I'm going to give you guys back over to JJ in Los Angeles as we're going to get ready here, guys, for an opening bell in just about 1 hour.
That's right, baby.
Over here in New York. Yep.
As always, Marty, thank you so much for being here today. Marty Errico, guys, from TradersAudio.com. Don't forget to check out Marty, his partner Jeffrey. They do a great job every morning, 8:50 a.m. Eastern Time. They kick off that broadcast on the NYMEX exchange. Again, head on over to TradersAudio.com or shoot them an email, Marty@TradersAudio.com. They'd be happy to give you more information about their broadcast. I can say from personal experience, it is worth every second of the day listening to them, because they give us a great roadmap every morning. It's really great to be able to hear what's happening on the floor. And in an active pit like crude oil, it's really quite, I think, to be almost an edge that really can't be traded without. Also, come and see me every morning, 7:30 a.m. We start the morning prep here, 8 a.m. Eastern Time. I open up my live trade room. Head over to SchoolOfTrade.com or email me, JJ@SchoolOfTrade.com. I'd love to know your feedback. I would love to send you an invite for tomorrow's live broadcast. So do you have some feedback for us? Would you like to see us do things differently? Maybe add something new here each day? Or would you like an invitation to come join us for this live broadcast tomorrow, where you're going to have the charts posted for you, you can ask questions, right, et cetera, et cetera. So keep in touch. Shoot us some feedback. Let us know if you want to come see us tomorrow, 7:30 a.m. for the live broadcast. And we'll catch you guys here for a Wednesday edition of our crude oil morning prep. Don't forget, we got news starting at 9 o'clock. Sounds like Marty and I are both on the same page here, looking for those sellers to come back in here, giving us selling opportunities today. And don't forget, we got 4:30 API news this afternoon, and we got that inventory number tomorrow morning, which we'll be talking about together tomorrow. Guys, keep in touch. Don't forget to learn this stuff so you can earn with this stuff. Come out and join me in the trade room. Log in and listen to Marty on his broadcast. We'll catch you guys here 23 hours and 30 minutes from now. We'll see you tomorrow, 7:30 a.m. on Wednesday. We'll catch you guys there. Adios, amigos. Bye-bye for now.